Stablecoins have been a hot topic in crypto since the Luna and UST collapse in 2022. But the burning question still remains, are they safe to hold or will they all eventually collapse due to regulation or the volatility of the underlying asset? In today's video, I'll go through all of the top 15 stablecoins in crypto and rank them from S tier to F tier. By the end of the video, you'll know exactly which stablecoins are safe to use for the long term and which ones to avoid at all costs. Welcome back to the Virtual Bacon channel. If you're new here, my name is Dennis. I'm a crypto angel investor for the past 5 years and I have invested in over 100 crypto startups. On this channel, I share my views on market trends and investing strategy to build wealth in crypto. Before we get started, make sure to check out our Telegram and Discord groups for more crypto insights and trading. You can find all the links on virtualbacon.com. First things first, we have to define stablecoins and why they're important in crypto. Number one, stablecoins can help you escape the volatility of crypto without actually cashing out to fiat currency or a bank account. This makes it super easy to go in and out of cryptos and go to a USD-based stablecoin on an exchange without having to wait multiple days. Stablecoins are also great for payments since they track the price of US dollars. So when you pay someone in a stablecoin, you can directly quote it as paying them in US dollar price. Stablecoins are also crucial in trading and DeFi since you need to pair one of these in a liquidity pool or in an exchange pair in order to see the price performance of the token you're investing in. Given all of these factors, it's really important for stablecoins to maintain their peg at $1 over the long term. So how do you rate a stablecoin? I have 4 main criteria. Number one, has the stablecoin maintained its peg over long periods of time for at least a few years? Number two, does the stablecoin have a strong asset backing? This typically comes in 2 categories. If the stablecoin is decentralized, then does it have a sufficient amount of high quality assets backing it that we can see on chain? Or number two, if the stablecoin is centralized, does it have a trustworthy custodian keeping track of the backing and is it officially regulated? The third criteria is that does the stablecoin have wide adoption in various exchanges, ecosystems, and DeFi protocols? And number 4, does the stablecoin have a large and expanding market cap which shows it is in high demand? Now that we know these criteria, let's get into the tier list. I want to start off at F tier, which are the stablecoins that I would personally avoid at all costs right now. And the first stablecoin I would totally avoid right now is PayPal's USD by the ticker PYUSD. The reason is quite simple. PayPal USD is really a Trojan horse that the US government and the SEC is installing into crypto. Even though this token is issued on the Ethereum blockchain, it is not decentralized. People have dug into the smart contracts of the PayPal USD and found some really alarming things. Assets can be frozen, transactions can be reversed, coins can be freely minted and burned by the admin, which is PayPal themselves. And based on the PayPal USD terms of service, you have to access it using your PayPal account, which means it is fully KYC'd and under PayPal's custody. So this gives them all the censorship capabilities of a CBDC, but it is just launched on Ethereum as a so-called token. For these reasons, PayPal USD definitely belongs in F tier. I don't think anyone serious in crypto should consider using this. There's no DeFi adoption. You cannot trade it as any other trading pair or provide liquidity with it. It's simply just a Trojan horse coming from PayPal. The next stablecoin I will completely avoid is USDT. This is a stablecoin launched by Justin Sun on the Tron network that is called Decentralized USD. But nothing about this is decentralized because number one, we know that Justin Sun and Tron tends to use his cartel of exchanges and DeFi protocols to prop up whatever stablecoins that he launches and just freely mint them. And in the case of USDT, it's even more obvious because this stablecoin is entirely backed by the TRX token, which is Tron's native token. You can see this directly on the website. Out of the $700 million of USDT supply, most of that is backed by TRX. This design is super risky because this is essentially just like Luna and UST's design. Whoever owns a lot of TRX can just freely mint USDT and essentially leverage up however much they want by using that USDT to purchase TRX again and putting it into this model. The only reason this hasn't collapsed is because it has a relatively higher collateral ratio of 175%, which means you need a bit more TRX to back the USDT supply. And since this is very centralized and we know Justin Sun is the main holder of TRX, he can just manipulate the market however he wants. Also, look at the USDT price chart. This stablecoin can be super volatile and it sometimes crashes to 97 cents and 96 cents regularly. Another thing to watch is the DeFi protocol adoption, and we can find this on DeFi Llama under the Yields tab. So here we have typed in USDT to find all of the liquidity pools and DeFi protocols that support the USDT stablecoin. And again, this shows something very alarming, which is that the number one place that USDT is used is on the Tron chain under the Just Lend project, which is another one of Justin Sun's toy project. For all of these reasons, I would put USDT in the F tier. I would not hold it, I would not use it, and I would not trust it at all. The next stablecoin I would avoid right now is a pretty major player, and it is TrueUSD or TUSD. Now, TrueUSD is actually a pretty big player with $2.7 billion of the stablecoin minted. And they claim that all of the assets are backed one-to-one. However, the main reason to avoid this now is because it has been revealed not so long ago that TrueUSD was acquired when they were under distress by none other than Justin Sun. So here you see Archblock, which is the parent company behind TrueUSD, have already claimed that Justin Sun was the secret TUSD acquirer in their lawsuit. And this transaction happened back in September 2020. This means for the past 3 years, Justin Sun has just been freely minting TUSD however he wanted. We can see this on the top left here. Tron chain has 2 billion TUSD on the chain, while on Ethereum, there's only 700 million. We know whatever happens on Tron is just completely decided by Justin Sun and his cartel, so this is not a good sign. There are two other pet projects of Justin Sun's that he uses to mint these free stablecoins. The first one is Just Lend that we have already covered, and here are the assets that it supports. We have USDD, we have Tether, and down here we have TUSD and USDJ, which are all his pet projects. So through this market, he can deposit all of his other shitcoins like TRX, Sun, BitTorrent, Ape NFT, Wink, which are all just shitcoins that he has created, and he can freely mint and borrow TUSD, the stablecoin. An even more crazy project has just launched recently, which is STUSDT, staked USDT, which also runs on the Tron chain itself. And on this platform, he claims that there is 4% APY for any stablecoin that you deposit on here. And the main stablecoins that is supported on here are USDT and TUSD. So you know that through these platforms, he's definitely controlling and manipulating TUSD. And a more serious issue is that the backing behind the TrueUSD is definitely under question because their main custodian, Prime Trust, has just filed for Chapter 11 bankruptcy. Right after Prime Trust had their issues, a couple months ago, TrueUSD have paused their attestations going through Prime Trust that have been showing the proof of reserves that's backing the TUSD stablecoin. So now we don't even know if there is enough backing behind the stablecoin to be redeemed one by one. Today, the main reason that TUSD is still stable is because two main players are propping it up. Number one is Justin Sun and his slew of DeFi protocols and exchanges, including everything that's running on the Tron network and his exchanges that he has bought up, which are Huobi and Poloniex. And number two, which is Binance, is also moving from USDT to support TUSD. And we can see this more recently by all of their announcements on launch pools and exchange listings, which are now denominated in TUSD and this new stablecoin called FDUSD. So all in all, even though TrueUSD has had a long history and it has a large market cap, I still will not hold it right now. It is under a lot of pressure and we don't even know if the backing behind it is still real because their largest custodian has gone offline. And now that it is under Justin Sun's control, it really seems that they can mint however much they want and borrow against it on the DeFi protocols with their own shitcoins that they have created. This brings us to the last stablecoin that I would totally avoid today, and that is First Digital USD or FDUSD. You might not have heard of this before, but this stablecoin is gaining a lot of popularity because it is being heavily pushed by Binance. This stablecoin claims to be a one-to-one USD-backed stablecoin issued in Hong Kong developed by First Digital Labs. No exchange uses this except for Binance today, and we can see this quite clearly. Even though it has grown to 260 million in supply, the only markets of it exist on Binance. And since this stablecoin launched, Binance has been heavily pushing it, adding it into margin, into launch pools, into trading pairs, into P2P markets, and all slew of listings. However, outside of Binance, this coin has literally no adoption in DeFi. When you search for liquidity pools or DeFi yield providers, no pools currently have FDUSD support. This stablecoin is pretty much controlled by Binance, and since the BUSD stablecoin was hunted down by the SEC, they have now moved their jurisdiction to Hong Kong and issued this new stablecoin, but not under the Binance brand anymore. This is all under a larger effort of Binance to move away from the USDT Tether stablecoin as their main trading pair and instead try to adopt TUSD and FDUSD as the main stablecoins on the exchange. The FDUSD stablecoin's reserve backing is also heavily under question. Even though they claim that they are one-to-one backed and there are audits, check out this reserve accounts report when it launched. They only said that there are 530 FDUSD issued with $1,000 in backing, and they have not published any reserve reports after. So this is pretty much just a front of their reserve account, and nobody really knows if the money is there. With all that being said, does Binance have a lot of money to back this $260 million stablecoin? Of course they do. That's small money for them. However, because of this larger issue that's happening with US Tether and Binance, these two stablecoins, TUSD and FDUSD, I don't trust them right now. And for these reasons, FDUSD definitely belongs in F tier right now. I wouldn't be surprised if TrueUSD and First Digital USD went down sometime in the next year or so as Binance find other better options. So I would definitely not hold FDUSD today. Next, let's move on to C tier, which are the stablecoins that are legit enough that I wouldn't consider them a scam. I'm okay holding these, but they just don't have much adoption or specific use case, and there are definitely better options that are similar. The first one is Origin Dollar OUSD. Origin Dollar is a pretty novel but simple concept. Basically, you can use DAI, USDC, and USDT to mint OUSD, and then these stablecoins are put into DeFi yield farming or other yield opportunities to give you a return automatically. And you don't have to claim these. You see how in the wallet, your USD or OUSD balance just automatically goes up as you gain more and more yield. This is the cool part. It's auto compounding, it's no lockup, no staking. And on this, you can get about 4% APY per year, which is decent, but not that great. In terms of adoption, OUSD has $20 million in supply right now. Its price peg has held really well for the past 3 years, except for the end of 2020 when the protocol actually did suffer a hack. So here you see November 2020, OUSD was hacked and there was a loss of funds, but I have to give it to the team. They actually had a full compensation where 100% of the value deposited to OUSD was compensated by the company. So they gave the money back to everyone from their treasury. This definitely gives a lot of legitimacy to the project that they're willing to do this. DeFi adoption for OUSD is also pretty good. There are 21 pools that you can find on DeFi Llama. However, if you filter by the $1 million ones that have at least $1 million in TVL, you see that the largest pool here by far is Origin Dollar's own project pool. This matches the website, so there's basically $19 million of DAI, USDC, or USDT that's deposited to mint OUSD and earning this 4% yield automatically. But outside of their own platform, there isn't much adoption. That's why I think this project should be in the C tier. It is legit, it is very stable, but it doesn't have very wide adoption or a very large market cap. Next up on C tier, we have SUSD. This is the native stablecoin to the Synthetics DeFi protocol. And today its market cap is around $40 million. But historically, the market cap has gone up much higher to as high as 300 million at the bull market peak. It also has a pretty long price history, which dates all the way back to 2018. Today, when you look at SUSD adoption on DeFi Llama, you see that most of the protocols that support it are on either Optimism or Ethereum mainnet. And this is the main place that SUSD is used today. It's a stablecoin serving the Optimism Layer 2 network. Synthetics is also one of the leading DeFi protocols that is still working on the project actively today. They have multiple platforms under their umbrella, including Quenta, Lira, DHedge, and a bunch of perpetual trading markets that are coming up. And all of these will use SUSD as the stablecoin. One thing to know about SUSD is that it is backed by the protocol's own currency, SNX. Here on the staking page, you can see you can mint SUSD by staking SNX, which is Synthetics governance token. This design is a bit more risky because instead of using Ethereum, Bitcoin, or USDC like other platforms, this directly has correlation of SUSD adoption to the price of SNX. However, to account for the volatility, Synthetics actually has a very high collateral ratio. So you see here, in order to mint $100 worth of SUSD, you need to deposit 222 SNX. At the current price of $2.24 per SNX, that means you need to deposit $500 worth of assets in order to mint $100 of stablecoin. Because there's that 500% ratio, the buffering is super high. And this means even if Synthetic's price drops 50% today, the stablecoin is still well capitalized. And this is the reason why the SUSD stablecoin has held very stable even during the bear market when SNX price crashed a lot. The downside to this design is that there is a certain market cap limit to the amount of SUSD that can be minted. Basically, if there is $500 million in market cap of SNX, there can only be a maximum of $100 million of SUSD minted. For these reasons, I put SUSD in the C tier. It is very legitimate. It's backed by the Synthetics project and it's still very active. However, its stability and super high collateral ratio means that the adoption is highly limited. It will only gain adoption when the bull market comes. Synthetics itself goes up a lot. I would still be okay holding it, but I don't see it dominating the market anytime soon. The next stablecoin on this list is Alchemix USD. Alchemix is a very DeFi native stablecoin that has been running since DeFi summer, and it is very innovative but simple to understand. Basically, you can deposit DAI, USDC, or USDT to mint LUSD, but the trick is you first deposit these stablecoins into Aave, which directly gives you a lending yield, and then you deposit these to mint LUSD. Once you do this, your collateral is still growing because it's earning that yield from Aave, and this means the stablecoin itself, the loan itself, is self-repaying. So it will be paying you, a couple % per year, and if you wait long enough, let's say wait for 5 years, your loan would have paid back itself. This is the main benefit, and it's quite a simple protocol. Now, looking at the adoption today, Alchemix does have a pretty high market cap of 167 million of this stablecoin minted. And the price peg has been quite stable since DeFi summer in 2021. It has held relatively well the $1 peg because it is only collateralized by DAI, USDC, and USDT. There are no gimmicky stuff going on aside from the yield generation. Alchemix also has really good DeFi adoption. On DeFi Llama, you can see some of the largest pools of LUSD can go very high. So on Curve, LUSD has $46 million in TVL on this pool, and on Convex it has 45 million. On this LUSD3 curve pool, 17 million, 14 million, etc. So there's a lot of liquidity pools that are using LUSD, and it's very liquid. One unfortunate situation that happened recently is that Curve Finance suffered an exploit in a previous version of the Viper smart contract language. And as a result, Alchemix actually had all their money drained that was deposited into their protocol. However, luckily, the Curve hacker has completely given back all of the money to Alchemix and to the other protocols that were affected. So now, following the hacker returning all the funds, there will not be any legal action, and they are working on a full recovery plan, which will be announced quite soon. So given all of this, I would still place Alchemix in the C tier right now because there is a little bit of uncertainty around this hack. But once this is settled, Alchemix could go up to B tier potentially. It is a widely adopted DeFi stablecoin, and it is very simple and composable that can be plugged into other protocols to earn yield. Next up, let's get into the B tier stablecoins, which are the ones that I think are very legit and have really good adoption. They're not leading the industry to be adopted everywhere or be held for long term. However, they are very legit, and I would be totally okay holding these for 6 months to a year if there's good yield on them. The first one is Magic Internet Money MIM. Magic Internet Money is the stablecoin of the Abracadabra protocol. This was very popular during the Avalanche or Phantom season back in 2021. Essentially, this is a very widely adopted multi-chain stablecoin. And the magical part is that it takes all kinds of collateral assets that can earn yield. For example, you can deposit wrapped ETH, Ape, Curve stablecoin pools, which are earning yield, staked ETH pools, which are also earning yield, and all kinds of different yield generating tokens by themselves into this protocol in order to mint the MIM stablecoin. By doing this, your collateral is earning income, but you can still have that stablecoin MIM that you can spend everywhere else, or even use it to leverage up your initial yield. A quick look at the adoption today. Magic Internet Money has 170 million in stablecoins minted, which is pretty good. But what's better is that when you look at the contract chains list, you see that it's supported on a variety of chains: Ethereum, Optimism, Binance Smart Chain, Polygon, Avalanche, Moonriver, Arbitrum, Phantom. So this is the biggest advantage of the stablecoin, is that it is widely adopted in many different EVM chains. So when you have a DeFi protocol spotting up on another chain, MIM will be one of the main stablecoins that gets integrated there first. And you can see this on DeFi Llama as well. It has really good DeFi integration. Not only does it have very good liquidity on Ethereum, on the main decentralized exchanges, these pools have $40 to $43 million. But you also have many of these other pools spanning across many different chains. So we have pools on Arbitrum, on Kava, on Base layer 2, which is new, on Optimism, Phantom, Avalanche, etc. So it is available everywhere, and they're all interoperable with each other. A somewhat unfortunate thing that happened to MIM in the 2021 bull market is that they had a deal with Luna UST, where they took in UST as one of these collateral assets, and after UST collapsed, they suffered some bad debt in the MIM loans. However, those have been paid back now. So that whole image and that whole fiasco is over. So today I do have pretty good trust in the MIM stablecoin. And whenever I go on a new chain, if USDC, USDT, and DAI is not there yet, I'm totally okay by using MIM as the main stablecoin on there. And that's why I put Magic Internet Money MIM in B tier, for its wide range of EVM chain adoption and good liquidity across multiple chains. It is a really versatile stablecoin that I am quite okay with using to farm for multiple months to maybe a year. The next one on the list is Gemini Dollar GUSD. Gemini Dollar is the official stablecoin issued by Gemini, the exchange that is officially regulated in the US. And that's the biggest benefit of GUSD. It has been fully regulated by the New York State Department of Financial Services since 2018. So it was one of the longest running regulated USD stablecoins. And it is fully backed by real US dollars 1-to-1, and customers can redeem for this cash at any time. There are also monthly attestations for this cash reserve. And you can find all of these attestations directly on Gemini Exchange's website. Looking at the metrics on CoinGecko, this stablecoin has $360 million minted, which puts it right at the top 100 spot of all cryptos. And the price history is also very reassuring. It has been trading since October 2018, and you see this peg has held relatively well, pretty much always holding right around $1 for the past 5 years. The main downside is the exchange and DeFi adoption. So when you look at the markets available for GUSD, mainly it is traded on Gemini, Coinbase, and just Uniswap. So this is just a stablecoin that is fully regulated in the US, but not that useful elsewhere. We see a similar scenario on DeFi Llama. The main DeFi liquidity pools for GUSD are just on Ethereum. So basically, this is just to keep the liquidity there so that GUSD price is stable. But it is not widely adopted in any other chain or any novel DeFi protocols to earn high yield. And that's basically everything to talk about for GUSD. It is highly regulated, highly secure, 1-to-1 backed, and issued by the Gemini exchange. It has a super long price history of 5 years, being held at that stable peg. However, outside of the main exchange and outside of the US regulated market, it doesn't have much adoption. So while it is super safe, it is also not that useful. And that's why I put it only in B tier today. The next stablecoin is Liquidity USD, or LUSD, and this one is in direct contrast with GUSD that we just talked about. So Liquidity is a fully decentralized DeFi stablecoin that is very easy to use and has super wide adoption. Basically, LUSD gives you 0% interest loans against Ethereum, and it is super simple. Basically, you deposit Ethereum into the Liquidity platform to mint LUSD, and that's it. You pay 0% interest. All of LUSD are backed by Ethereum, and you can track all of the Ethereum backing the LUSD stablecoin at all times by just going on their website. So here on the dashboard, you see there is a total of $695 million in Ethereum, or 401,000 Ethereum deposited here, and the total LUSD is about 400 million right now. So this is totally over collateralized. It is very safe. And this protocol is so decentralized, it doesn't even run its own front end. Instead, the Liquidity platform just runs smart contracts directly on top of Ethereum, and people run community front ends that you can find on the main website. So you see here, when you click use Liquidity, choose a front end, And you see many different website operators just track this dashboard that has all of the Ethereum deposited that is backing the stablecoin itself. So by using this design, this stablecoin cannot be stopped. It is truly, truly decentralized, running only on the blockchain. Looking at the DeFi adoption, LUSD is also widely adopted. So you see it does have very liquid pools on Curve on Ethereum with $22 million on this liquidity pool, so you can easily buy and sell into it. And it has many other pools that are worth a few $100,000 to $1 million on Ethereum, on Optimism, and on Arbitrum, and even Avalanche. This is actually pretty impressive. LUSD is integrated in 85 liquidity pools on multiple chains. Looking at the CoinGecko stats, liquidity does match that $290 million in stablecoins minted, and the trading markets are also pretty good. You see all of these decentralized exchanges that use LUSD. But keep in mind, these are all decentralized exchanges because this stablecoin is truly decentralized. You see it's not even listed on any centralized exchange at all. So that comes with a bit of downside, which is that the price stability is a little bit weaker. So you see for the past 2.5 years that it has been operating since April 2021, the price tends to fluctuate between 98 cents to around $1.05. It has not had a major incident, but because everything is maintained on chain and it is correlated to the price fluctuations of Ethereum, you're not going to get that perfect stability at $1 with a more centralized stablecoin like GUSD. Because GUSD has market makers that is directly arbitraging that and making sure that the price stays exactly at $1. This is just a trade-off you'll get. The price will fluctuate a little bit, but you get much better DeFi adoption. So for these reasons, I put Liquidity USD in the B tier. It is widely adopted as one of the major DeFi stablecoins, but it is not the most stable because it is completely decentralized. Next up is a stablecoin that you most likely have heard of or even used, and that is Binance USD. BUSD needs no introduction. It is the stablecoin issued by Binance, and it is super widely adopted on the Binance chain and throughout its ecosystem. It also has a very, very large market cap of over 3 billion already, and it has held a really stable $1 price for the last 4 years. Obviously, BUSD has really good DeFi adoption on the Binance chain as well. We can see this on DeFi Llama. If you filter by BUSD, you see that it is the main stablecoin used on PancakeSwap, on Alpaca, on Venus, Stargate, and just about all of the main decentralized exchanges on Binance chain use this stablecoin. This leads to a whopping 215 DeFi liquidity pools that use BUSD today. Very, very good adoption. However, one major downside that played out this year is that the SEC ordered Binance to stop issuing the BUSD and even sued its issuer Paxos. They alleged Paxos and Binance for selling BUSD as an unregistered security, which is total nonsense because it's a stablecoin. How do you sell a stablecoin as an unregistered security? There is no expectation of profit. But regardless, this had a major effect. Paxos, the main issuer and custodian of BUSD, announced that they will no longer mint new BUSD. You can still redeem BUSD for real USD or convert it to the other USDP, but the supply of Binance USD can only contract now. It cannot expand. And we can see this on the market cap chart. During November last year, Binance USD actually had 23 billion of the stablecoin minted, but it has just gone down only, and today it's only at 3 billion total. This means people are only able to redeem Binance USD for real US dollars, but nobody can create more because eventually this will cease to exist. Now, Paxos is a very legitimate institution, and it is the custodian that backs a lot of regulated stablecoins, including the latest PayPal USD, which is heavily connected to the SEC and the US government directly. Therefore, I have no doubt that BUSD will maintain its peg at $1. However, I still have to put it at B tier today because even though the peg is totally stable and you can trust that there is real US dollars, I wouldn't recommend anyone to use it today because the wide adoption of it on the Binance ecosystem will only shrink as time goes on, as Binance USD's market cap shrinks and as people keep redeeming Binance USD out of the system. So this is a sad case. It belongs in B tier right now because it is still really big, but I think eventually it will even move to C. Okay, the last stablecoin on B tier is Pax Dollar USDP. Pax Dollar is the stablecoin issued directly by the custodian Paxos. And Paxos, like we just covered, is the most widely adopted and one of the most trustworthy crypto custodians in the US that directly works with stablecoins. They are the main custodian behind the BUSD and also PayPal USD. Just like Gemini UST, this stablecoin is also fully regulated in the US, having oversight from the New York State Department of Financial Services. The adoption of this stablecoin is also a little bit bigger than Gemini's at $500 million in supply. And it has a very long and stable price history that dates back all the way to the end of 2018. So for the past 4.5 years, it has held that peg really well. In terms of DeFi adoption, this is also pretty good. It is definitely much better than Gemini USD. We can see it has a very good liquidity pool on Ethereum under Curve DEX with $120 million in TVL. So if you want to sell this stablecoin on chain into a liquidity pool, you can sell millions of worth with no slippage. And you can get pretty good yields on it. You can get 5 to 8% just on Curve and Convex. On the asset backing and trust side, it is also unquestionable. All USDP are equivalent to US dollars and they can be redeemed one-to-one at any time. Now, the reason why I put Paxos dollar USDP on top of Gemini USD is because Paxos is a custodian first and not a crypto exchange. This eliminates any commingling doubts between the exchange customer funds and the stablecoin backing. We have seen this being a problem that the US regulators could go after with Binance USD and with other exchange-issued stablecoins. So this could be one area that Gemini dollar could come under fire later on. But Paxos doesn't have any exchange business. Their core business is just keeping a transparent asset backing for these stablecoins, and they are purely a stablecoin custodian. It does have better DeFi adoption than Gemini dollar. And on the centralized exchange front, it is also traded on all of the main centralized exchanges like Binance, Coinbase. For these reasons, I put Pax dollar USDP at the top of the B tier. I think it is the stablecoin that is the safest on this list so far. Okay, moving on, let's finally get into the A tiers. And we only have 4 stablecoins left. The first stablecoin in A tier is Frax. Frax is a completely decentralized stablecoin, and relatively speaking, it is a newcomer to the market. Its price history only dates back to the beginning of 2021. However, it has had a very meteoric growth in market cap, having peaked at over 2.9 billion total Frax minted. Today, there is 800 million Frax circulating in the market. In terms of asset backing, Frax does not have the highest collateral ratio. In fact, it is under 100%. It's currently at 94% asset backing, which means there are some algorithmic parts that's keeping the price in check. 94% is totally fine for all intents and purposes. Other stablecoins like Tether definitely is not 100% back, but as long as you have enough liquidity in the market, you should be okay. Now, for these downsides, Frax makes up for it in its extremely wide adoption in multiple chains and DeFi ecosystems. Frax has their own decentralized exchange, Frax Swap. There is Frax Lend. There is Frax ETH, which is a liquid staking protocol for Ethereum. And on DeFi Llama, you see Frax is integrated in 219 liquidity pools. The DeFi liquidity pools for Frax are also extremely deep. You see on Ethereum, the Frax USDC liquidity pools can go as high as $400 million in TVL. These pools have such good liquidity, so you can easily sell $10 million worth of Frax and you wouldn't impact the price much. And the list goes on. There are so many different liquidity pools that are in the tens and if not hundreds of millions of dollars in liquidity. One main reason for the DeFi adoption of Frax is because Frax themselves owns a lot of the liquidity that is backing the stablecoin peg. Here you see on their balance sheet, these are the owned assets of the Frax stablecoin. And you see the owned Frax USD liquidity pools account up to $500 million worth. This means all of these liquidity are locked to back the price peg of Frax. It's very simple. It's why we see so many deep liquidity pools on DeFi Llama. Due to this decentralized nature and these liquidity pools being owned by the protocol, we have no fear that we'll lose that liquidity. Unlike other stablecoins where the central operator decides when the stablecoin is pegged and when they want to withdraw their money and abandon the project, in the case of Frax, this cannot happen. We always have the liquidity pool to back the price peg. Not only this, but on CoinGecko, under the chains list, you can also see this stablecoin is adopted on many different chains. Ethereum, Near Protocol, Polygon zk EVM, Moonbeam Optimism, BNB Smart Chain, Avalanche, Polygon, Phantom, Harmony, Arbitrum, Moonriver, Solana, and Moss. So many different chains, and not even just EVM ecosystem, but also Near protocol. In my opinion, Frax is definitely the top 2 DeFi stablecoin today, only falling behind MakerDAO's DAI. For these reasons of completely decentralized and super deep liquidity pools, and the fact that Frax stablecoin is integrated on all of these different chains and all of these DeFi protocols, I put it in A tier today. Frax is your best bet for a good DeFi farming stablecoin. It is relatively stable, it's very decentralized, there is very heavy liquidity pool backing, and you can still get really good yields on it because it is relatively newer. Okay, the next stablecoin needs no introduction, and that is Tether USDT. Tether is by far the most widely adopted, widely used, highest volume, and highest market cap stablecoin on the market today. It has $82 billion in market cap and $16 billion in trading volume per day. Tether is also 100% backed by their claims. Their backing have come under question before. Some people say it's 80 to 90% backed, but regardless, they should have tens of billions of dollars backing this. So I would have no issue even if there's mass redemptions on this stablecoin. They're also the most widely adopted on different blockchains. So on the chains list, you can find all of these different chains that have Tether support. And on the centralized exchanges, well, you don't need to look elsewhere. Every single centralized exchange will support USD Tether because Tether is the default trading pair that you use to pair with any volatile token. When you want to speculate on their price, you compare it to Tether. Now, the main reason why I put Tether in A tier instead of S tier today is because there's a lot of recent drama around Tether versus Binance and Justin Sun and CZ. I have tweeted about this before. You can go check it out on my Twitter. Essentially, because of Operation Choke Point 2.0 coming from the US regulators, Tether, Binance, Justin Sun, Huobi, Tron, a lot of these crypto native players that used to play with stablecoins are being shut off by the US banking system. This means even though they have all this reserve backing and all this money in their bank accounts, they cannot redeem that and send it to US customers whenever people bring Tether to them for redemption. This has led to CZ, Binance, and Justin Sun and Huobi moving away from USD Tether and issuing their own stablecoins like TUSD and FDUSD, which we have covered in the earlier list. This means there could be some potential fallouts to come in the next couple months. We will continue to see US regulators cracking down on the crypto native stablecoins, and Tether is apparently their #1 enemy. I have covered this conflict recently around stablecoins. You can check it out on my channel with this historic crypto bills video. Essentially, there is a new stablecoins bill that has come out which said that you cannot issue stablecoins that are USD based from a foreign entity, and they directly called out Tether as a foreign entity that is not fully backed by cash or cash equivalent. And this is why we have seen slight depegs of USD Tether against real US dollars in the past few months, because people really couldn't redeem USDT for real USD in large amounts, so they had to sell USDT and actually cash it out through other regulated stablecoins like USDC. So this scenario will continue to play out in the next few months as Binance, Huobi, CZ, and Justin Sun move away from USDT. We might see other exchanges start to abandon USDT as the main trading pair and adopt some other stablecoins that they can control. On the side of USDT, they're trying their best to save themselves, and in order to meet their mass redemptions, they have been going through USD Circle. So check this out. In the past 12 months or so, the total amount of USDT and TUSD market cap has gone up 18.5 billion. But during this same period of time, USDC market cap has dropped exactly 18.5 billion. This is because all of the banking partners of USDT and TUSD have been shut off. So whenever Tether needed redemption from their stablecoin holders, they had to actually sell USDT for USDC and then cash it out through the USDC redemption portal. And we can see this quite clearly on the chart. For the past year, USDC market cap has shrunk by 19 billion, while USDT plus TUSD market cap have grown by 20 billion. You see the growth here in the red chart and the shrinkage here in the blue chart. Why is this happening when we're in a crypto bear market? There could not have been sudden demand in these more risky stablecoins of USDT and TUSD, and at the same time, USDC losing market share. The only explanation for this is that USDT and TUSD have trouble with their bank accounts and they have to go through USDC as a fiat off-ramp. We know for a fact that new money is not coming into crypto. For more insights on this, you should definitely follow me on Twitter Twitter, but without getting further into the rabbit hole, USDT is still kind of left in question for the next few months. We really need to see what happens with USDT's market cap and their banking situation, if they can become fully regulated in the US, or if they can find some offshore entities and offshore banks to continue their redemption. I have no doubt that they do have money, being the largest stablecoin since 2015 and having been operating since forever. However, the question is, can they actually access that money and give it to their customers as redemption? So for these reasons, Tether USDT only belongs in A tier today and not S tier. This risk needs to be resolved within the next year or so before the next bull run comes. Otherwise, it's going to be a huge ticking bomb in the next few years between the largest stablecoin and the US regulators. Okay, lastly, let's get into the S tier stablecoins, and we only have two left. They are DAI and USDC. First, let's cover DAI. This is the best decentralized stablecoin with the largest market cap, the largest volume, the largest exchange adoption, DeFi adoption, etc. It is supported in all of the major chains and DeFi protocols. Wherever you can find USDT and USDC, chances are you can find DAI. This is super impressive given that it is a decentralized stablecoin. So look at the CoinGecko's list, you can see on all the major chains DAI exists, and looking at the market caps on every centralized exchange, you can trade DAI. Looking at the metrics, DAI has a supply of almost 4 billion today, which is pretty decent. I believe it is the third largest stablecoin today, behind USDC and USDT. Now, how DAI works is also very simple to understand. It is decentralized and it is backed by a variety of assets instead of just backed by US dollar. On this website, daistats.com, you can track at all times how much backing there is behind DAI. So there is 5.3 billion DAI in circulation right now, and we have 9.2 billion in collateral backing it. Out of this collateral, here are the main breakdown of different assets. We have Ethereum, 10%, we have staked Ethereum, 18%, we have 5% Gemini USD, 7.5% USDC, and three types of RWA assets, which I believe are all treasury bonds, and then some others. And because this protocol is completely decentralized, you can find all kinds of front ends that break this down completely. So here's the full collateral list of the DAI stablecoin. The biggest two here are both RWA vaults. So what are these exactly? The number one here is called Monetalis Clydesdale. Doing a quick Google, you'll see that this is actually a treasury bond setup where the foundation itself has purchased $1.2 billion in liquid treasury bonds and used it to back the DAI stablecoin. The second one here, Block Tower Andromeda, is a similar thing. So doing a quick Google on this, you'll find that another $1.28 billion of US treasury purchase was through this Block Tower Andromeda vault. Block Tower is the main manager behind this vault, and essentially they put all of that money into treasury bonds, which are cash equivalent and super safe, and used it to back the DAI stablecoin. The next two here are also very clear. STETH, which is Lido staked Ethereum. This is just directly Ethereum staking, which are $1 billion total worth of Ethereum staked that is used to back some part of DAI. And then you have Coinbase custody. This is $500 million of USDC, I believe, that is deposited into Coinbase. And then here we have PSM, which stands for Price Stability Module. This is, I believe, an exchange mechanism on DeFi exchanges where there is $400 million in USDC that is used to pair with DAI in a liquidity pool to maintain that peg. And then we have some more Ethereum, some more GUSD stablecoins, some more Ethereum, etc., etc. So basically, the DAI stablecoin is well collateralized, it is very decentralized, and it has a wide range of custodians and safe assets backing it. There is 171% of collateral ratio, which means there is much more assets backing the existing stablecoins, and the main assets are USDC, GUSD, Ethereum, staked Ethereum, and treasury bonds. And because these are highly diversified in different assets, they're not so correlated, and the custodians are also very different, so you're not trusting just one single party to hold on to that money and not misuse it. In the last bear market, there was a bit of scare when DAI was over 50% backed by USDC, which led to people speculating that DAI is going to die if USDC dies, which made it very not decentralized. However, today, this is no longer true. The highest reliance of DAI is actually on treasury bonds now. So doing a quick search on DeFi Llama, we also see DAI has super good DeFi adoption, over 382 pools. And the liquidity is obviously super deep. On MakerDAO, there's $1.4 billion deposited. On GMX, there's $400 million. On Curve, there's $250 million. and 100 million, 60 million, etc., etc. So there's no doubt you can get your liquidity anywhere across these pools, and they're all decentralized. So for all of these reasons, I would put DAI in S tier today. It is by far the #1 option for a decentralized stablecoin, given its long track record, the decentralized nature of the protocol itself, the asset backing being widely diversified, and different custodians, so no single entity controls all that risk, and the wide range adoption in decentralized finance and centralized exchanges puts it right at the top of decentralized stablecoin. I will have no problem farming anywhere or holding DAI for the long term, even for multiple years. Lastly, the #1 stablecoin in all of crypto today is USD coin USDC. USDC is by far the most stable and most regulated stablecoin in the US. Each USDC is backed by either cash or cash equivalent assets, and they have frequent audits to show their proof of reserves. You can find this directly on Circle's website, which is the issuer of USDC. Every month, they will publish one of these reserve attestations. Here's an example for June. They have $22 billion in US Treasury repurchase agreements. They have $2 billion held in the Circle Reserve Fund, and they have other cash held at financial institutions in the US worth over $4 billion. And at any time, these assets definitely exceed the total supply of USDC, which means each dollar of USDC issued is backed 1-to-1 by at least cash equivalent. Now, USDC is centralized, but the custodians are super trustworthy and regulated. The main entity behind USDC is the Center Consortium, which is jointly owned by Circle and Coinbase, who are both regulated financial institutions in the US. Looking at USDC's price history, it is also the most stable. Even though you see some more fluctuations here, this is because most of the time USDC trades at exactly $1. In comparison to USDT and DAI, usually they will fluctuate around 10 to 20 basis points. So they will trade at 0.998 or 1.002. But for USDC, most of the time it would trade at 0.999 decimals. And then on the upside, it would trade at 1.0005-ish. So it has super high precision. In terms of DeFi adoption, USDC is also second to none. There are 1,836 pools paired with USDC. In fact, in a DeFi exchange, USDC actually beat out USDT and DAI today. In any decentralized exchange, USDC is the preferred stablecoin to be the main trading pair. USDC also exists on every single major blockchain out there. I'm not sure which one has wider adoption, USDC versus USDT, but chances are if it's a major chain, both will be supported. On the centralized exchange side, it is also supported on every exchange. Now, the main reason why I put USDC on top of USDT in terms of safety is because USDC can actually be redeemed. So if you look at the market cap chart of USDC, you see that it has grown in the bull market from 2020 to 2022. But in the bear market since the end of 2022, it has actually gone down. This means people were actively taking their USDC to Circle and actually redeeming it for real US dollars. This makes sense. We know the bear market is a period of shrinkage, and definitely people are exiting the market and taking real dollars out. However, when you compare the market cap chart of USDC versus USDT for the past year, this is actually quite interesting. USDC actually is showing a healthy trend because the market is shrinking. Interest in crypto is definitely going down, and stablecoins should be shrinking as people are taking money out of the market into real US dollars. But look at Tether. Tether has actually grown in market cap in the past year. This just doesn't make sense to me. If anything, we know that dollar is exiting the market, so there shouldn't be any stablecoins that's actually growing in dominance. We know that Tether definitely has a less reputable trust than USDC. So why would Tether grow while USDC is shrinking in the same period? The only explanation that I can give is that Tether is having trouble in their bank account redemptions, while USDC is still healthy. So people can take USDC, redeem it for USD. But when it comes to USDT redemption for real US dollars, there's definitely some trouble there. This is why I'm actually happy to see USDC's market cap going down in the past year. This means USD coins are actually being destroyed and can actually be converted to real US dollars. This actually gives me more confidence in USDC over USDT, and that is why I put USDC in the S tier while USDT in A tier today. If there is any single stablecoin that you want to hold that is the most regulated and by far the most trustworthy and the safest for the long term, in my opinion, that is USDC. This is actually my choice as well. Whenever I want to go fully into stablecoins, I go all into USDC. And there you have it. These are the top 15 stablecoins in the market right now, ranked from worst to best. The top 3 stablecoins by far is still USDC, USDT, and DAI. And Frax is also pretty good. I would say that is the top 4 and still worth considering for the long term. For all of the other stablecoins that are not mentioned in this video, I have considered a lot of them, but I really think those are not even worth considering. They are either way too small, way too illiquid, or just not trustworthy at all. So I wouldn't even consider holding them for a very short period of time. We don't need a ton of stablecoins. Stablecoins are meant to be stable that you can cash out to and hold for a long period of time. So you just need a few that are decentralized and centralized as good options. Okay, that wraps up today's video. If you like this content, make sure to follow me on Twitter at virtualbacon0x. I have tweeted out all of this previous research about USDT versus USDC, the whole exchange fiasco. So to get more deeper insights that are too quick for these in-depth videos, definitely follow me on Twitter. And check out our Telegram alerts channel, Virtual Bacon, where we drop daily market insights and sometimes alpha as well whenever I find interesting projects. Lastly, subscribe to our newsletter on virtualbacon.com, where we post weekly market insights, and we're going to start a copy trading competition very soon with our partner exchange Fairdesk, and we're going to list our latest exchange deals that you can use to follow my everyday trades for Bitcoin, Ethereum, and other altcoins. So definitely check this out. You can get a huge deposit bonus as well. Thank you guys for watching, and see you in the next video.